internet of value at Ripple, we're thinking much bigger than just cross-border payments. It's kind of like Amazon with rare books in the early days, just this market happens to be a $10 trillion market.
We are at a historic turning point.
Said in the past that you are doing for money what email did for communication.
Moving the whole revolution forward.
Take on it.
There's trillions of dollars parked around the world.
XRP.
Is there a possibility that Ripple could take over Swift one day?
Well,
welcome back, ladies and gentlemen, to episode 2 of our script. Let's get right in today's video. The BIS Innovation Hub, the IMF, the G20, the G7, the World Bank, they're all behind Ripple and its digital asset XRP, but mainly we're going to focus on the BIS Innovation Hub, Bank of International Settlements. You're dreaming if you think that BIS is going to use Ripple. I don't see them one time in that text. And in today's video, I'm going to just, scratch the surface with the information we're going to be covering because we don't want this video going over an hour long. And I'm going to show you the hardcore evidence that they can't do anything without Ripple. They will need Ripple and they will need to source a liquid asset like XRP as a bridge currency to connect every economy together. Ladies and gentlemen, welcome back to another episode. The information we're going to go over today is just facts, nothing but facts. Take a look at this. So we can confirm the BIS Innovation Hub did test Ripple and XRP through payment channel funds, and I'm going to break down exactly what that means in a moment. But as you see the spike that happened on a Sunday, of course, we're going to get into it. But first, let me back it up with some hardcore evidence. This working paper from the Bank of International Settlements, Trust Bridges and Money Flows was published July 2023. And listen to what they said here. Keep in mind, Tobias Adrian is one of the individuals that is leading the Bank of International Settlements in terms of cross-border settlements.
And for this reason, at the IMF, we are working hard on the concept of a global CBDC platform to trade and to manage risks. And my colleague, Tobias Adrian, will talk more about it later.
Bridging the new technologies all together. And he was in the same panel as Brad Garlinghouse back in 2019, and a lot of closed door meetings that you are not going to hear about. Listen to what they said here. Modern forms of money depend on credit relationships that require trust. Difficulties associated with making cross-border payments can be better understood by factoring in the importance of these trust relationships, which can be particularly difficult to establish and maintain between counterparties located in developing economies. With countries, central banks act as trust-enhancing mechanisms across market participants by eliminating the need to maintain costly bilateral trust relationships. This is done by providing a common settlement asset and a common settlement platform. And remember what Michael Barr said in terms of trust and what I've been repeating for years now.
We need to make sure that the payments architecture has the right privacy protections so that people can trust using the system, because trust is really the essential linchpin of any payment system. Without trust, you can't make a payment, whatever technology you're using to underlie that basic approach.
Wow, a common settlement asset and a common settlement platform. It gets even better. In cross-border payments, a common settlement asset or a common settlement platform does not exist because different countries use different currencies and have different banking systems. In this environment, bilateral credit relationships between transacting parties become essential, but these relationships are typically scarce and costly. Central banks can have intervened by providing liquidity through swap lines, but bilateral trust relationships between central banks that are necessary for the creation of swap lines are often missing. Now it talks about 5 reasons to why we need some sort of bridge platform to connect every economy together. Listen to this part, okay? Number 5, they said, an important question is who builds and operates such a marketplace? They don't even know who's going to build this. And which rules will govern it. International financial organizations could do so. since they already have well-established governance standards and some experience in making international transfers to and from central banks. Another question is whether the public or private sector should be or will be involved. While the most efficient and socially desirable setup may be debated, the private sector is rapidly building this infrastructure. Wow, folks, go ahead and smash that like button if you have any brain cells on what's about to happen. The private sector is rapidly building this infrastructure. That is so massive. And listen, I don't even know what else to say, because they refer to Ripple and XRP in this document as well. 3 models arise: a private settlement asset and a marketplace such as Ripple's XRP, an open source marketplace such as Stellar Foundation, or more recently, DeFi networks and marketplace and settlement asset based on unbacked crypto assets, such as Strike, which leverages Bitcoin and the Lightning Network. However, a public solution, potentially run by a regulated private entity,
wide adoption of a global stablecoin, potentially a global currency governed only by the incentives of a private company, is something that will deserve and will receive the highest level of regulatory expectations.
However, a public solution, potentially run by a regulated private entity, has key advantages such as tackling coordination problem and around centralizing participants and liquidity provision, offering clear and trusted governance and operational stability, and providing full compatibility with financial integrity standards. And Ripple has all those 3 pillars. Providing financial integrity, has a centralizing participating individuals that have liquidity provision, and is offering a clear and trusted governance for operational stability. And even when we jump into Project Polaris, another BIS, Bank of International Settlement PDF, talking about offline payments with CBDCs. And we have 2 of Ripple product management individuals, Anthony Wealth and Anthony Welfare, a part of this, putting together this PDF. Because, a couple years ago, XRP ledger payments could go offline with new proof of payment protocol, which was called XPOP. XRP Labs developers showcased a demo of XPOP, the proof of payments protocol that will equip the blockchain to initiate XRPL-based transactions without an internet connection. And what are the odds? 2 years later, we have Project Polaris, and we have individuals from Ripple leading the way. And if you listen to what they say here, you can make this stuff up. Development of offline payment solutions should be based on collaboration between the public and private sector. They even said without such collaboration, central bank requirements may not be met, and solution vendors may struggle to gain funding to continue their research and development. And look at their objectives, impact on objectives. Greater focus on universal access and bridging isolated groups to similar levels of inclusion to wider population. Building out payment infrastructure and internet access has equal weight to improving financial inclusion, and we know that is what Ripple is set out to do from day one. And now getting into the most epic moment of this video. They told you back in 2022 at the World Government Summit that they're introducing a new system. Did people listen?
Well, today, I think, we are on the brink of a dramatic change where we are about to, and I'll say this boldly, we're about to abandon the traditional system of money and accounting and introduce a new one. And the new accounting is what we call blockchain.
And now in 2023, we have IMF saying we cannot ignore this. And we have been calling this since day one.
And indeed, our financial landscape is undergoing a profound transformation with the emergence of digital forms of payments, of which CBDCs, tokenized deposits, stablecoins, and other crypto assets. And many of these innovations don't fit into our traditional definition of money. However, ignoring them is no longer an option. And to gain a better understanding of their impact on monetary policy, financial stability, and our international monetary system, we must measure them. As the MD highlighted, we need to bridge the data gaps that these new forms of payments have created to be able to formulate informed decision-making and to think of how to measure money in the new digital age.
And we have the head of the IMF making bold statements like this. Like, why are we even talking about payments? It sounds like such a nerdy thing to talk about, right? Nobody listens to this stuff, but I don't think people understand that money makes the world go around and why this is going to be such an important transition. Listen to what she says here.
We need robust data sources and sound statistical methodologies to understand what is going on with these new means of payment. We must consider whether our understanding and computation of traditional monetary and liquidity indicators need to be re-evaluated considering newer types of payments. Through cooperation across borders, industries, and professions, so we can develop a comprehensive and consistent approach of measuring these new payment methods.
And now we are going to get into this test that was done 100% was the BIS Innovation Hub. Okay, this is, let me know what you guys think in the comments down below, but I'm going to break down exactly what happened. So this was Ripple before they got sued and XRP was deemed pretty much nothing. They didn't have clarity back then. Okay, so they had some payment channel funds going through. But now, since we have regulation in place, we have big individuals like the Bank of International Settlements, SWIFT, the G20 members, the World Bank are all behind this now. We are seeing tests that can't really be hidden at times, okay? As we see this big spike of August of this year, August 20th to be more exact, was done on a Sunday, of course. We've covered previous tests, always done on Sundays, and that is a fact. So it increased to an all-time high for this metric, which is the payment channel funds. I'm going to break down exactly what it means in a moment. Over 30K. But before I break it down to you, I want to set the tone so you guys understand where the demand is going to come from, because I'm going to lay it out to you. I'm going to read out presentations that I put together, but listen to what Tyrone says here from the head of Onyx at JP Morgan. They have their JPM coin, whatever. That's not going to last long, but they're going to utilize USDC to scale, but USDC cannot scale. So who does USDC look for? At the end of the day, liquidity is going to be the benchmark for this new asset class, especially utility tokens like XRP. So listen to what he says here very carefully, because it's going to go hand in hand with what I explained.
I think this sort of thesis still needs to be played out, but I think where USDC is going to hit a cap is going to be at scale. So when I talk about the $10 trillion that we're processing every night, and I was looking this morning, I think the market, the 24-hour volume for both USDC and USDT is like $25 billion or something. That's like 400 times less than what we do every day. The $10 trillion that we're processing every night.
And USDC itself we've seen over $3.5 trillion of transactions directly on the internet between counterparties. And so if we can, improve it with more scalable blockchain technologies like, Brad's company provides.
The $10 trillion that we're processing every night.
And now let's get into payment channels on the XRP ledger are a tool designed for efficient, scalable, and secure off-ledger transactions. Number one, purpose of payment channels. Payment channels enable rapid processing of large volumes of transactions, particularly useful for microtransactions where the high frequency and low value of transactions can be processed off the main ledger. Number two, I call this animal mode. By handling transactions off ledger, payment channels reduce the operational load on the XRP ledger, making it more scalable. Payment channels are particularly beneficial for situations where two parties need to send frequent or repeated payments, streamlining the process and reducing transactions. So when you heard Tyrone talk about $10 trillion a night, those are going to be repeated payments going back and forth, especially the repo markets as well. Now we have number three, function of payment channel fund. It's used to increase the amount of XRP in a payment channel. It essentially tops up the channel's balance, allowing for continued or increased transaction flow. Adding funds to a payment channel ensures that it can continue operating without interruption, especially critical in long-term or high-volume transaction scenarios. Number 4, usage of XRP. Payment channels on the XRP ledger primarily use XRP. The design of these channels is optimized for XRP transactions, taking advantage of its fast settlement times and low transaction costs. And remember what they said here about XRP at the Ripple swell.
As more companies like Veeam start to use XRP and use digital currencies in their funding flows, they're going to be putting a massive amount of pressure on banks and larger financial institutions to start using this as well, or they're going to be toast. But XRP, it's really about this very fundamental driver of demand. Yeah, I mean, if XRP is going to be inserted deeply into the financial system, the market cap has to be orders of magnitude bigger. It has to be able to support institutional flows in the orders of magnitude of trillions of dollars. You know, today it's a lot smaller. As more companies like Veeam start to use XRP and use digital currencies in their funding flows, they're going to be putting a massive amount of pressure on banks.
However, it is not limited to XRP. While XRP is the primary asset used on the XRP ledger payment channels, the ledger design allows for the issuance and transfer of other digital assets. However, the payment channel fund transaction specifically deals with adding XRP to a payment channel. Things are about to get even more hectic. Here's how banks might use this feature, and they will use this feature. In a scenario where a bank needs to process a large volume of transactions quickly and cost effectively, using payment channels can provide significant operational efficiencies. This feature allows for flexible management of the channel's funding, enabling banks to adjust the available funds based on transaction volume and frequency. For international transactions, which often involve large sums and require rapid, reliable processing, payment channels can offer a more efficient alternative to traditional banking systems. And that is why we are seeing the spike. These have to get tested until it hits the whole real showcase. And now let's get into why the XRP that's held in escrow, we will just not see it. XRP held in escrow by Ripple can play a significant role, and a lot of people underestimate this. Building trust and credibility. By managing XRP releases from escrow transparently, Ripple can build trust amongst financial institutions. This transparency is important for banks which operate under strict regulatory and compliance standards. And again, I sound like a broken record, but that's why Ripple XRP, they have full regulatory clarity. And especially why 100 billion XRP was pre-mined, because when XRP was designed, it was designed from a banker's perspective and how banks can utilize this asset. And they realized that in order to provide financial stability, some sort of a prefixed supply will be required where the centralized individuals are going to be holding a part of that escrow. And I'll make a more in-depth video coming up about them not dumping on us. A trustworthy environment makes it more likely for banks to adopt XRPL payment channels for their transaction needs. And why escrow was the key. Ripple can use escrowed XRP to fund various initiatives such as incentives of new partnerships, developing new technology solutions, or supporting the adoption of the XRPL amongst banks and financial institutions. These initiatives can help expand the ecosystem around XRPL, creating a more robust and versatile platform for banks to use. And that's what's happening behind the scenes. And the escrow and liquidity provision. Ripple can use the XRP from its escrow to provide liquidity to payment channels. This can be particularly beneficial during periods of high transaction volumes or in situations where additional liquidity is required to facilitate smooth transactions. Enhanced liquidity can make XRPL more attractive to banks as it enables more efficient and reliable transaction processing. So let me know what you guys think in the comments down below. I do appreciate every single one of you guys. All the information we covered on today's video are all facts. You could think what you want. If you think it's all hopium or if it means nothing, that's totally fine. But when the value of XRP exceeds $20, $30, $40, $50, $100, I don't want to hear a word out of you in the comments field. You probably will not be there because you'll be crying, filling up your bathtub. But folks, let me tell you one thing. There's a reason why XRP has been where it's been for the past 10 years. The big guys are in here. The reason why Ripple went into this SEC versus Ripple case with so much confidence. One, the law was on our side. The facts was on our side. But again, the IMF, the World Economic Forum, the World Bank, all these heavyweight players are behind Ripple and XRP. And they trump the SEC. It's pretty much game over from here. People are going to learn the hard way when it goes absolutely parabolic. And when people see a utility-driven market cap, remember, if $1 trillion flows through the XRP ledger on a daily basis, it's absolutely game over. I mean, that's nothing, though. It's going to go way past that. We will be back with another video.
And there is a lot of money that is being put in terms of trying to solve these technical issues of interoperability. Now, the second one is more complicated. It has to do with liquidity. So imagine that you have a pair of currencies for which there is not a complementary demand. You need to go and search for a third-party currency in order to make this settlement actually happen. And this really complicates things. So we need to put pieces of technology that can make more efficiency this use of liquidity so that more transactions can be settled.
We started building RippleNet with the thesis that crypto liquidity would eventually be able to support robust global payments, large payments. RippleNet was designed so that customers seeing the benefits of our fiat-based network could flip the switch to ODL once the market was mature enough. And this is exactly what's happening. Flip the switch.
I think what we're building has, it's solving a real problem. And I think all of the tokens, my advice to anybody would be, understand the utility. If there's real utility and there's real value being delivered to a real customer, there will be value in the token.